So Clover Health Investments is a stock that's still super new at the public market but was already able to perform an incredible 50% run in the last few days only. And the crazy thing about this is that it all happened as a form of recovery after major sell-offs at the beginning of this year. So what we are going to do today is give you an insight into what is happening to Clover Health stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so in order to figure out whether Clover Health Investments is a stock to buy at the end of this video, it's crucial to first look at the company you want to trust your money with itself. And in the case of Clover Health, we are looking at a huge Medicare Advantage insurer in the United States. The company through its software platform provides preferred provider organization and health maintenance organization health plans for Medicare-eligible consumers. But what's so special at the current stock moves is that it all happened without any major catalyst. That of course raises the question of why it is up in the first place, and as this is super important to consider for our prediction at the end, let's take a look at the reasons behind today's rally. So instead of soaring on news, this seems to be driven by investor sentiment that recent short seller attacks aren't as bad as they seemed and that Clover Health is a prime candidate for a short squeeze. As of the latest available information, nearly 36% of Clover's float was sold short, making it one of the most heavily shorted names in the market. And there's certainly evidence that short squeezes can work. We've seen this sort of scenario play out extremely well for retail investors this year. Indeed, suggestions that there could be some sort of orchestrated squeeze appears to be enough to move any stock these days. But today, Clover also announced its earnings date. The company is scheduled to report earnings on May 17th, and investors appear to believe earnings could be much better than short sellers suggest in their reports. But why was the short interest so high in the first place? Well, it all started with Hindenburg alleging that Clover Health was a broken business while pointing out several red flags. Clover Health reportedly overbilled Medicare, including charging $200 per visit for physicians to use its medical data software Clover Assistant at twice the national reimbursement rate. And according to insiders, the Clover Assistant is of poor quality. It frequently makes irrelevant or old diagnoses that are difficult to remove once a patient has recovered. With those accusations in mind, however, we have to ask ourselves whether the company is actually legit. Let's start with earnings first. So in 2020, Clover Health collected $665.7 million in premium revenue, which equals a 50% increase to the year before. And over the first 2 months of the year, Clover Health's total member count increased massively as its beneficiaries outside of New Jersey almost tripled as well. So, while there may be problems with the company's software and systems, they don't seem to have an impact on the health insurance side of its business. So here's the deal, it is clear that Clover Health's insurance side of the business is legitimate and well-liked. As for its software, the company could potentially secure an additional 200,000 beneficiaries under a new payment model sponsored by the Centers for Medicare and Medicaid Services. The program allows Clover Health to directly contract with physicians across the nation to use the Clover Assistant for Medicare patients. This year, the company expects to further increase its sales and member count to $835 million and 69,000 respectively. As we can see, Clover Health is already on track to surpass that latter metric. Its stock valuation of about 4 times sales is a pretty good price to pay for 24% annual sales growth as well. With so many traders betting against Clover Health's fortune, the slightest of positive developments, such as new opportunities to use Clover Assistant, would lead to an uncontrollable rally to the upside. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot, and see you next time.